Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts, and this is the all tuckered out newest member of the Caravel family. This is Coda. He's 10 weeks old. He's had a very busy day. So, welcome to Market Insights, our weekly commentary on financial markets and the economy. Let's get started. Right, Coda? This week, the overwhelming big news in the economy and in financial markets is that the President and Congress have agreed on another $1.9 trillion stimulus package. And I say another because if you remember, the prior administration and the prior Congress passed a $900 billion stimulus package in December of last year, and they haven't quite finished spending that before they have added this $1.9 trillion in additional stimulus on top of it. When you pull back the lens and you look at all of the COVID stimulus spending, it's over $4 trillion, which is about what we spent on World War II, inflation adjusted. Which I guess makes sense given that tragically COVID has cost the American citizens about the same amount of lives as World War II, maybe a bit more. So, what will this new package mean for financial markets and for the economy? Well, first, let's recognize that the biggest impact that huge stimulus packages have for financial markets is not what they do. It is how they are financed. And how all of these stimulus packages have been financed for the last year is the Federal Reserve has printed the money, bought government bonds, and that's given the Treasury the money to go out and finance these stimulus packages. And lo and behold, the same script's going to play out this time with one little variation. Because last year, the Fed printed money so fast, they printed money faster than the US government could spend it, believe it or not. And so the US Treasury is sitting with about $1.5 trillion in their checking account. And as this stimulus spending occurs, they're essentially going to pull down their checking account. So the Federal Reserve doesn't have to print any more money. They printed it last year. The Federal Reserve is just now finally going to spend that money that's already been printed. But it's going to have the same impact for financial markets. A big wave of newly printed, not newly printed, but newly spent, newly injected into the economy money is going to hit financial markets in the next several weeks. All right, what will that money be spent on? Well, Americans up to a certain income limit, $150,000 for a family, $75,000 for individuals, they're going to get $1,400 checks. And you say, wow, that's going to be great for the economy. Actually, history would suggest it's not going to be nearly as stimulative to the economy as it will be for the stock market. Because Americans, believe it or not, if you give them a one-time check, they tend to save a lot of that. And right now, the savings rate for the US is over 20%, partly because there's nothing to do because of COVID, you can't travel and stuff, but much more because of the stimulus payments that have been given to Americans. You see this big spike in savings every time there is a stimulus payment by Americans. Surveys said that about 50 to 60% of this stimulus payment is going to go right into the stock market. So you can see stock market's kind of excited about that. Now, does that mean that the economy is going to be completely, left out of the stimulus package? Absolutely not, because in addition to the $1,400 checks that go to everyone, there's also going to be extended unemployment benefits to the unemployed, and this is huge, $3,000 per child, $3,600 for children under 6. For every parent making less than $75,000, married parents making less than $150,000, they're going to get $3,000 a child. $3,600 for kids under 6. All right. Now, Unlike the general populace, two people that can generally be counted on to spend the money that they're given are the unemployed and parents, because kids is expensive. So this is going to be very, very big stimulus. Let's summarize all the things that are going on with this stimulus package. We're going to get a big, huge injection of printed money into financial markets. We're going to get a lot of people taking their $1,400 checks and using it to buy stocks. And the economy itself is going to get a lift from the money that's going to parents and the unemployed at the very time when we're getting close to hopefully the finish line of COVID. Because the president is saying by the end of May, there should be enough vaccines for everyone who wants one to get a vaccine. So you can see that there's a prospect for a normal summer. Now, when you think about the totality of that, and you compare to where we were last year we had a $2.2 trillion stimulus package. And we didn't know exactly how long the COVID nightmare would extend, but we knew we were looking at a long, difficult period where things would not be normal. And yet when 2.2 trillion hit financial markets and printed money, and the stimulus payments happened, and the checks went into the stock market and all those things, we had a dramatic rally in the stock market, even though the economy was going to have to go through a long, extended period of difficulty because of COVID. Fast forward to now, we've got a $1.9 trillion stimulus. We've got a lot of printed money that's going to hit the financial markets, and we might actually have a normal summer. We might be seeing the light at the end of the COVID tunnel we've been traveling through for so long. Can you understand why financial markets are so excited and why equity prices just keep rising? Thank you for joining us for Market Insights. We hope you enjoyed it. If you did, like it and share it with your friends. We also, if you'd like to see more of our research, you can subscribe at the link below, and you can check out our website, caravelconcepts.com. Thanks.